Guys, for those who are on right now, here's your chance. There's a number of you guys who've already taken advantage and have already signed up and already started doing the paperwork. There's a lot of money that's on the that you're leaving on the table if you're not doing it. But just hang tight. We're going to just run through this and then we're going to answer all your questions. But Mark, can you briefly just talk about like the company and whatnot? Because again, there's a few people are like, well, who are they? Like, sure. Do they know, like, why my CPA, like, they don't know some of these things, who are these guys, So Mark, if you don't mind just briefly, just kind of, talking about the company and then your background before we just kind of start the show here.
Yeah. Thank you for that intro. And yes, my name is Mark Sullivan. I'm the CEO of ERC Specialists. And our company arose just about a little over a year ago out of the need for someone to understand, process, help business owners out with this particular credit called ERC. And we'll talk about what ERC is, and we'll talk about why CPAs, for the most part, don't want anything to do with it. So we have affiliates that help us spread the word of what ERC is, and a lot of our affiliates are CPAs. So CPAs deal with yearly taxes, and they do get a summary of your payroll taxes, but where this credit lies is with quarterly payroll taxes. So for someone that asks their CPA, can you do this or can you help me? They probably can figure it out, but they're not wanting to, whether or not they're telling you, because they have to learn a completely new process. They don't have the information already in place with payroll information. They don't deal with that. They probably have never filled out a 941 form, let alone an amended 941 form. So they can do it, but because they're not specialists in it, they also probably won't maximize it. So one thing that we do is we actually maximize the credit, understanding all the little fine points to it. And we do pride ourselves in maximizing that. We've had people run the ERC credit and then run it back through us. And on average, we're about 8% higher than what CPAs do. And there's a few things that they miss. For instance, this doesn't lie. You can count the first 2 weeks, the last 2 weeks of Q1, even though this starts just in Q2. And that alone, depending on how many employees you have, can be tens of thousands of dollars. So anyway, so I'm the CEO. I don't have decades of experience though with payroll. So one thing that a CEO should be good at is realize what they're good at and realize that they're probably not good at most things, but they can bring in people that are. So that's what we've done. Realizing the need for this, we have brought in some experts. Consultants with the IRS, our director of fulfillment's on the board of the American Payroll Association. We have in-house general counsel, but also retained 3 other tax attorneys to help us navigate this brand new credit. So it is exciting for a business owner because the prospect is tens of thousands of dollars to you in your pocket. But there's also a lot of questions that we'll address today, such as how do you qualify? Do I qualify? What do I do if I got PPP? How do I account for that? When does the money come? Do I have to pay it back? We can account for all those things. So Glenn, do we have enough time passing? I can kind of get through it all and go through kind of a more systematic approach, or what are your thoughts?
Yeah, so let's, obviously there's more people coming on. A few more people jumped on while we were talking there. The great thing is that we're going to hold the Q&A at the very end, because just in case there's a few stragglers coming in and you have questions, I told everyone that we'll answer all the questions here. I don't have all the answers, okay? You guys are asking me questions, but Mark has most of them. And if he doesn't have all the questions, his team, who he's already talked about, they definitely have all the answers. And this is all they do. That's the big difference here. This is all they do, and they're very good at it. So Mark, I've already given you, if you need to share your screen, that's already given you permission for that, but you're all set to go. And again, I see more people jumping on, and I'm sure, as more people come on, they may ask you the same question, same things, if you don't mind, that you already have mentioned. So people are jumping on, but you have the floor now, Mark.
Okay, and I typically do have a presentation, but maybe what I want to do today, and I typically find it better just to talk than to go through a scripted presentation, is I'll kind of just go through a very high level what ERC is, how to qualify, and maybe cater that a little bit to dentists, right? Because we have dealt with probably 1,000 dentists. We just talked to the Texas Dental Association. I think we have partnered with the Utah Dental Association. I'll have to check on that.
I think you
but
guys were in the California Dental Association as
okay,
well.
yeah, I don't totally know, but we deal with a lot of dentists, and the path to qualify, fortunately, can be very straightforward. Okay, so we'll chat about that. But okay, so at the very end, and I'll try to keep that within about 10 to 15 minutes is all. Okay, sometimes that can go a little bit longer, but we'll just high level. And I found the most effective thing is after that, we will open it up to questions. Glenn, maybe if you can kind of formulate that and,
sure, yeah.
and present those to me so I don't have to read and answer, that might be really helpful. Okay, so what are we talking about today? Let's kind of reset this for those that are just joining us. We're talking about the ERC credit as it pertains to you, a business owner with W-2 waged employees. What is the ERC credit? Well, it arose out of the CARES Act as a result of COVID. When the pandemic hit in March of 2020, bipartisan support for this multi-trillion-dollar package called the CARES Act. In that, you guys are probably familiar with the PPP, the Paycheck Protection Program. But also in that was this ERC credit. Now, for a number of different reasons, this got forgotten about. The main reason is at the beginning, at the onset of that CARES Act, you could not do both. You could not do ERC and PPP had to go through lenders. So the advocates for which program quickly was apparent that PPP, there was more money in it for the lenders because ERC doesn't have to go through a lender to get the money. So quickly that just became the focal point of relief, of financial relief for businesses out there. They both have to do with payroll, and we'll talk about the overlaps there. Well, a year later, with the American Rescue Plan Act in March of 2021, they wanted to give out more support for business owners. So they amended this, the ERC credit, where you can now do PPP and ERC. You can't double dip the PPP wages, but without getting into the details, that's rarely reducing, that doesn't reduce the credit by much. And that has to get into dates and maximums, and we can dive into that if you'd like, but that's not a massive red flag. We don't see the credit get reduced by too much when we're accounting, which we do. We need to account for the PPP amount, but it's not a deal breaker in terms of the credit amount. Okay, so then the question became, well, what is ERC and how do I qualify for it? And it was vague. There were two paths to qualify for ERC. Generally speaking, this is hundreds of pages of legislation into two paths, and that was a revenue decline qualifier. Very simply put, you needed a 20% revenue decline in the quarter that you're claiming qualification compared to that same quarter in 2019. Now there's some variables there, but that seems very, very black and white. Okay, well, a lot of businesses have done better in the pandemic. Is there a path to qualify? And the answer is yes. But before that was further clarified, that was generalized as you can qualify if you qualify under a suspension test. And no one knew what that meant. And again, hundreds of pages trying to clear up what that meant and still confusing. No one wanted to claim qualification. So the IRS, luckily, and this is where I think a lot of your businesses on this call will qualify. The IRS with Notice 2021-20, for those that care to look it up, on page 28, it's a 100-page document, they talk about, well, I'm an essential business. I wasn't shut down or I wasn't required to shut down, but my business operations were affected. And they were affected because of supply chain disruptions. Does that qualify under suspension test? And this is what gave a lot of insight into how broad the suspension test could be. But they also defined one of the many ways that the suspension test can qualify your business. But that one very definitive way was if your operations were affected with supply chain disruptions, that qualifies you for that whole quarter. So what does that mean? Well, we know that supply chain disruptions started at the onset of COVID and they're lasting even through today. If you have had products, goods that were disrupted, doesn't mean that you weren't able to get them over time, but if they were delayed, if you couldn't get them at all and you had to, not offer a certain product or service, you couldn't get a repair part in or, things like that. Those are all things that affect your operations. And again, that's just one way of a suspension test that they claim qualification. So supply chain, we find a lot of businesses claiming that. We do know that 97% of all supply chain disruptions were a direct result of the onset of those shutdowns. that just backlogged everything. And it's just, it just caused a cascading effect that we're still experiencing and trying to come out of today. Okay, so then the third way to qualify is with a direct suspension. So I would imagine you guys are essential businesses, so this doesn't apply to you as much. But if your business was shut down, this is on the early onset of the pandemic. We heard these shutdown notices. This was common in Q2, Q3 of 2020. Then this is where you can claim qualification as well. But luckily with supply chain, you don't need a direct shutdown order to your business. That could have been an indirect shutdown order to another business that affected supply chain that ultimately affected your operations. Or the black and white one is revenue. We could talk for hours on qualification, and I suspect there's questions on that, but let's move on from that. Okay, so what is this credit? This credit, the easiest way to summarize what it is a refund to the business on W-2 wages that were paid out over the course of up to 6 quarters. Okay, so I like that definition a little bit better than the acronym. ERC is Employee Retention Tax Credit, and that causes some confusion because you did not need to retain employees, and it's not a credit of the taxes that you paid. It is literally a refund on the wages that you paid. Let's give you an example. If you paid one W-2 waged employee, and this does only include W-2 waged employees, not 1099. Okay, so I know that's a bummer for some, but that's just what it is. We have to look at those, so we can't, there's really no way around that. But if you paid a W-2 waged employees $10,000 in Q3 of 2021, this credit may give you $7,000 back on those $10,000 of wages. So it's up to 70% of the wages that you paid. On an employee, the maximum credit is up to $26,000 per employee. So we're talking about a lot of money here. The average that we're getting, so it doesn't always hit the max for a number of different reasons, but the true average that we get to our employees or for an employee is about $15,000. So generally speaking, if you have 10 employees, you're looking at about $150,000 credit. Well, what does that mean? Is this a loan like PPP? This is the best type of money that you can receive from the government. Unlike PPP, you don't have to ask for forgiveness. It's not public information, unlike PPP. Okay, this is tax, and so it's going to be private information. EIDL is a loan. This is not a loan. A grant, which is typically the best money you can get from the government, has to be used for certain things. This has no restrictions on what it can be used for. This is the best money. This is a true refund back to the business. Here you go. Thank you for paying employees, not even retaining them. You could have kept them for 1 month and fired them and still claim credit for that month, right? I mean, it's a very unique credit and it's available for you. Now, this program has ended. It ended in Q3 of 2021. The reason why we're talking today is your 941 form, which is what we specialize in and where this tax credit sits, can be amended. And so we have time to be able to amend that to get that credit back to you. Right now, the IRS is taking about 5 months. They were taking 8 or 9, but they've worked through that bottleneck and they're taking about 5 months to get that credit. Okay, so who are we and why are we talking and why can't an accountant do this for you? An accountant probably could do this for you. But what we find is that accountants don't deal with 941 forms. The 941 is a quarterly tax form. They don't deal with quarterlies. They do year-end taxes. Okay, so who at your business is filing those? It's probably behind the scenes with your payroll provider like QuickBooks, Gusto, ADP, those types of companies. And it's done behind the scenes. And we're finding if you reach out to those companies, they don't want to go back and amend those. It's not worth their time to even calculate it. We actually work with some of those companies as well. So, okay, so it's your accountant may figure it out, but we have a lot of accountants that wanted us to provide this service because there is a lot to it. It's a brand new service with ERC. There's a lot to it. And so that's what we do. We specialize in it. Well, who are we and what have we done? Again, I'm the CEO, but we've brought in a lot of expertise around the certain areas that we do need to provide expertise. This would be CPAs, CPPs. For those that were on the call, I already mentioned that our Director of Fulfillment is on the board of the American Payroll Association. We have tax attorneys. We have compiled a list of every mandate order, national, city, state, municipality, because ultimately the concern on this is it's a lot of money. What if the IRS comes knocking on my door? How can you guys substantiate that? We have those lists to be able to provide the IRS if we need. And really, that's what it's going to take, is they're going to want a mandate order, shutdown order, and some basic information on the qualification steps. That's going to be easy to provide, but again, if you haven't done over 10,000 companies like we have, that CPA or someone doing this may not have the experience when the IRS is asking about this credit because they have 50 other things to do. So again, I think there is a need to truly specialize in this particular credit, understanding the ins and outs of it. To date, we have filed over $2 billion of credits. And at the end of this, which is probably another few more years, we should account for roughly around 15 to 20 billion in filed credits. So this is a big credit. You're dealing with probably the biggest company in the country that specializes in this fulfillment for this particular credit. So hopefully you feel like you're in good hands. We're quick with the work. We can scale it up so that we can get you in line to get that credit back. The urgency right now for you guys is basically the IRS is getting backlogged with this. And so first in, first out. I don't want to portray that this will be taken away because personally, I think that is a very small chance, but it wouldn't be unprecedented to have something, especially with inflation rising, for them to try to cut out programs that are giving money out the door left and right. So we do know that checks are being issued right now. So get in the door, get your check back. And if they do grandfather you in, great. It wouldn't be unprecedented that they do cut it or shorten the time that you're able to qualify. So there's really no reason to actually get started or to not, get started. Okay, so Glenn, how was that? I think that's kind of a very general overview. I think we have some questions and that will lead to really what is on everyone's minds.
Yeah, absolutely. And thank you so much, Mark. And thank you so much, Mark, for being here. And so I have already a list of questions that was asked in our group with the lead up to this. And just to let you know, again, like I gave people the option, hey, jump on the webinar, answer any questions. But if you feel like you want to take advantage of this and work with ERC specialists, go ahead and do it. So a lot of people have already jumped on there. But the main question a lot of people have asked is we talked to them about the fees and whatnot. Their concern is that, well, what if we do the upfront fee? Maybe if you're comfortable, we can talk about the fees. I know there's a discount when you do an upfront fee. Their concern is like, okay, well, what if I paid the upfront fee and then you guys, for some reason, can't get the credit?
Yeah.
Something fell through. So if you could just go over like what the fees are so we can be totally transparent here. And it's funny, right when I said that, more people are logging on, but just talk about that and then talk about when if there's ever been a scenario and what if there's a scenario if they have already prepaid and for some reason they didn't get their credit.
Yeah. So what sets us apart that we feel is we don't charge anything up front. You can come in the front door. You can submit your documentation. We'll do the work. We'll tell you to the penny what your credit is. When you come in through the front door and do our questionnaire, you'll get an estimate. And that can happen in about 10 minutes. And Glenn, do you want to put that link up there of where they can go for that?
Absolutely. Let me go ahead.
Okay, so you can go through in 10 minutes, you can understand if you qualify or not. And then you'll get an estimate of what that credit may look like. Now that is an estimate. We're generally just taking our average per employee and your employee count. You'll get that estimate, but if you submit your paperwork, it takes us about a week to process everything. We'll email you and say, this is your exact credit if you want us to proceed. There's no commitment up to that point. We'll never ask you for a credit card or your social or anything like that. And I think that's what sets us apart. At that point though, if you'd like to proceed, you can pay us in one of two different ways. What most people do is they say, there's a lot of money. It wasn't on my radar anyway. So when the check comes in, you guys can take a cut of it at that point. And we do charge 15% if that's the route you want to take. And that's typical. If someone is confident in our ability to file it and that they're going to get it back, then they want to pay 10% up front, then they can pay 10% at the time of filing, credit card, wire, ACH, however they want to do it. And then we'll file that. And if in the event that they do not get the credit, that's fully refundable. And that's not just on this conversation. Of course, there's a contract that spells that out very clearly. In the event that it's proportionate or lower, then of course that fee will be proportionately lower. Let's just address this because I talk with everyone here. What if we're out of business? Like, oh, what assurances do we have that you guys will be in business? Speaking a little bit to who we are, again, we have filed close to 2 billion in credits. We have tens of millions of dollars coming in the front door every month. And at the time of your filing and the time that you hear back that you're not qualified, let's say that's the scenario here, we will have probably 5 times the amount of receivables still coming in the door, because the IRS still takes about 4 or 5 months. So I look at this, from a business standpoint, there's really no way that we would be we'd be defunct or even have an opportunity to strategically shut down the business and not pay our liability. There's just too much money that will be in the pipeline. So we also have excess of 8 million insurance policy, in place, liability, professional policy, and cyber insurance. So we do have a lot of measures there. We do work with multiple banks. So we've had to go through SOC security and audits and things of that nature. Okay, hopefully that answered that.
Yeah. And again, thank you so much for laying
Sure.
that out, because I think that's everyone's concern is like, okay, well, if I want to take advantage of this, but what if I don't get that amount or whatnot? So thank you for answering that. That puts a lot of people at ease.
And maybe, sorry, I'll just add this. Unlike PPP, this is not a program that is being approved or declined. This is a tax credit. So in almost every case, the full amount of the credit that we are putting on there is going to be issued. It's very rare that it's different than that. It's actually almost, well, maybe in one in 2 or 300, they might adjust it for a few different reasons, but it's almost going to be the exact amount or declined. And the main reason that it would be declined is we're amending an existing 941 that they should have on file. Sometimes, whether it was a late filing or just a mix up from the IRS, they'll decline it saying we don't have the original 941. In a lot of cases, we'll just refile that. If it was, fictitiously put in, there was a lot of fraud with PPP. I'm not suggesting that here. I'm just explaining the process. But if someone just created a 941 to try to get a lot of money, unlike PPP, that doesn't go anywhere with ERC. It's going to be an internal red flag. They send us a notice and say, fix this problem and get back to us. Of course, there's not a problem we can fix with that. So it just doesn't go anywhere.
Excellent. No, thank you so much for answering that. Now we have this other question here, and this doc, let me go ahead and click this button here to answer it live. Okay. So I acquired an existing dental office in September 2020 from a retiring dentist. I retained all 4 employees for 9 months, and then they left. Do I qualify? It's a new entity that was formed in between February and March of 2020.
Okay, well, let's get specific then. So within what we just talked about today, everything that we talked about with those amounts, 26,000 per, all of that, how to qualify is February 15th, 2020 or before. Your business needs to have been started by then. There's 2 schools of thoughts there. One could be the EIN creation date, or the other could be when you actually started business with revenue or started operations. So you can strategically use one or the other there. So then anything after that, the question at a high level is there any opportunity if I started a business after that? And that may fit here. So the answer is yes. That is called the ERC startup credit.
Okay.
And it's actually it's very simple. It's only 2 quarters, Q3 and Q4 of 2021. And there's a max to it. $50,000 max per quarter. So a total of $100,000 that you could get back. And the only restriction is you cannot have made more than $1 million in 2021 of revenue. Okay, so they don't want just someone recreating something and they're really they took off, or an existing business. It's kind of meant for startups. So if that fits within your case, then the qualifications of revenue or supply chain actually doesn't exist with this startup. You're automatically in, which is great. Okay.
That's great news. I think especially there's a lot of startup offices that kind of started up around the pandemic. Now, the thing is that they could always, again, there's a link, guys. I'll put it in the chat there. I'll continually put the link in there. The link's in the group as well. But look, they can click on that link and go see if they qualify, and you guys will let them know, right? Because the thing is like you can think all you want until you actually put the info in. Let the experts let you know. So, I mean, normally how long does it take for someone to come back and on your team and say, hey, okay, you guys qualified or you didn't qualify? Normally, how long does that take?
So they can go right now and within about 10 or 15 minutes, go through the questions and find out if they qualify or not and what a general estimate is. So that can happen, as soon as they get off the call.
Okay.
Then there's one bit of effort that we need from the business owner. And this is the only thing standing in your way from that credit or it not going anywhere because our hands are tied. And that is we do need some information from you. And that would be 941 forms and a very specific payroll report by check date, by employee for a specific date range.
I mean, if you have a CPA, they can easily get this for you, right?
No, and that's the reason. So your payroll person will.
Ah.
But that's why a CPA sometimes they don't have payroll information in most cases.
Mm-hmm.
They will get a year-end summary of these 941s to file taxes. But let's be very clear, a CPA or accountant typically doesn't ever deal with payroll, and that's what we need, let alone do they have the payroll information. Now, some are doing double duty, and they do payroll as well. So that they do that as well. But what you're probably going to need is to log into QuickBooks or ADP or
Gusto or something like that.
Yeah, and try to find that and navigate where that's at. And that's sometimes why that step right there sometimes takes a little bit. Now we do have step-by-step instructions.
I was going to ask you that. Is there any
providers.
Resources that
it's step-by-step. So you can step one, open that up. Step two, click on this particular tab. And we've tried to cater that to each of the payroll providers. Okay, so then the question is, how long does it take us? Once we have the documents, we're at about 5 business day turnaround to get it totally turned around, ready to file for you to sign. Once you review it and agree to the fee, then at 3 clicks, we file that. And then the IRS takes about 5 months right now to actually send the checks out.
5 months. Okay. Well, again, like I told everyone in the group, the faster you do this, faster you get the money, right? We don't know. Again, Mark just said like, hey, he doesn't have a crystal ball. He thinks everything is going to be okay. He thinks the money will be there, but we're heading into kind of like scary times right now in our economy. I think we all know about that. So who knows, right? Who knows, right? Okay. So we got that question. Mark, we got a whole bunch of other questions. You ready, man?
Yeah. Oh, yeah.
All right, let's keep going. Next one is, can we include the wages of the owner doctor who is paid as a W-2 for the ERC? The PPP did include the owner's wages. So a lot of times we have our LLC or PLLC and we're like a W-2 employee of that company. Yeah. So this doctor's asking, hey, can we benefit from that?
So the IRS is very clear on this. And I like when it's very clear. The gray stuff is where we have to guess. And I don't like guessing on this stuff. So this is very clear. You cannot include wages of a majority owner of that business. Majority is defined as 51%. So 50% counts. You can count those wages. If you and a buddy own 50-50, you can each count those wages if they're W-2. All W-2 wages count in that case. If you and your spouse own 50-50, the IRS views that as owned by 100%. So spouses or direct relation like a son or a daughter, they're going to combine that as together. So
but if you have a partnership and it's 50-50.
The partnership and it's 50-50, you can use those wages.
Oh.
Majority is 51%.
All right. Well, Dr. Lee, hopefully that answers your question there. Guys, keep the questions coming. These are really good questions. This is going to go back to that first question we asked you about this doctor. My office started in January of 2020. Do I make the cut there, or do they make the cut with the startup one? Do they make the cut with it? Your thoughts on that? Opened on January 2020.
Yeah, so that's typically a higher credit amount if you can start before the cutoff date to a new startup business. So February 15th, 2020 is the date the IRS said. So before that is, yes, you qualify. And after that is, yes, you qualify only for the startup portion of it though. So the good news is with our questionnaire, it intuitively walks you through all that. So you don't need to guess on any of this. The questionnaire will gather all that information for us to know what direction we're headed with filing.
So this is going back. And again, I want you to reiterate this because sometimes whenever we hear about these things, like this is too good to be true. Hey, why am I not doing this? Why didn't someone tell me before? Well, guys, that's why we're doing this. Okay. Like I've looked at what people are getting and I'm like, you guys are just leaving money on the table. You didn't even know about this, but now you do. So this doctor's asking, okay, so if we get the money, we can use it for whatever we want for the business, correct? So he wants to make sure like he heard it right what you said earlier.
Yeah. So short answer, yes. I always like to give to a group of smart people a little bit of explanation because that helps in validating my short answer of yes. So yes, you can use whatever you want. Unlike PPP, you had to use it for payroll.
Mm-hmm.
You do not have to use this for payroll. It could be, but you don't have to. Unlike a grant where it's typically, hey, you got to use it for these things. This is not the case with that. This is a credit. It is a refund on the expenses that you already paid. And when the IRS issues the credit, it's a CP 210 and it's an overpayment. So they basically said you overpaid your taxes, not just the tax part, but payroll. And here is the credit back. How you account for it, this might get too deep, but it helps in understanding just how broad this is it does not need to be counted as a line item of income. Your CPA will know this. They can quickly look this up. It does not need to be counted as a line item of income, but it does reduce the payroll expenses that they probably used to offset, the income that came in. So what does that mean? Well, at the end of the day, it probably means that you're going to pay a little bit more taxes if this money funnels through to you as an owner. That probably is what's happening. So because this is found money, before this call, you might not be thinking that you qualify for 100,000 or whatever the amount is. Because this is found money, you're probably budgeting your business without it, trying to make it work without it. So typically what happens? You get this money and you don't need it to operate. So it goes ultimately in your pocket. And we understand that, and that's fine. It needs to run through the business for accounting purposes, but yeah, you don't need to use it for anything specific, and it can line your pocket if that's ultimately what ends up.
Hey, does it get any more blunt than that? Okay, so we have Dr. Hag who's asking, again, you had gone over this, but let's go over this again. I mean, is there a official deadline to apply? Obviously, you should do it as soon as possible, but is there a deadline, or what do you think the deadline is?
So tax law states that you have 3 years to amend a tax return.
Okay.
And nothing has been partitioned out for ERC, meaning there's no difference. We have 3 years to amend the return. This return, what we're looking at for this credit, when I say an amount of 200,000 on average, which is the average credit for a business, that yes, it's all bundled up to one credit amount, as I'm telling you, but that could be 6 different quarters, each with their own credit amount. So it started in Q2 of 2020. So we have 3 years from that date, Q2 of 2020. So we have till Q2 of 2023 to amend that return. And then it ended in Q3 of 2021. So we have 3 years after that, Q3 of 2024 to amend. So we have time. This money will not run out today. If you don't get on there today, that's fine. But what I would encourage you to do is see if you qualify and move forward with it. Because as I mentioned, there's 2 things that might be different today in the future. And that is the backlog of the IRS, as more businesses hear about this. And then also it wouldn't be unprecedented for them to allow those that came in and received this credit to be grandfathered in, but for them to cut it short very abruptly, where you might be out of time.
Yeah.
So it's available now and it's legal and it's a big credit. You need to do it, but don't feel the pressure that the money will run out. Because as of right now, it's not a finite amount of money. It's just tax law. So the Federal Reserve will just keep writing checks.
Hey, but they can stop it whenever they want, right?
Yeah, they can. Also,
I mean, it's not like they're not doing anything. They can just stop it whenever you want. And if you haven't gone through the process, then there's nothing you can do at that.
Yeah, and it would take a change in legislation because this is law at this point, right? It's not a program, it's just tax law. So it would take a change in legislation, but they've already amended it 2 times after the initial law. So this was amended as late as November 2021 with the infrastructure bill. So they are setting a precedent of constantly adjusting this. Okay, so, and also I see, I don't know if it's from the same person, did I hear correctly that you could not have revenue over $1 million? Let's be very clear about this. That is only for the startup business credit for those businesses that started after February 15th, 2020. That's the only disqualifier for the startup business credit. Assuming that your business started before then, there's no revenue restriction. The only restriction on like ceilings of you're too big is a a 500 full-time employee count, which I don't know how big these.
I don't think anyone on this call has that amount there. That's good. Thank you for clarifying that. I want to ask you again about the startup, because there was a whole bunch of people who said, hey, I just opened my practice, around that time. My practice is too new. I don't think I qualified. And I think there's a whole number of people who didn't register for the webinar who are in that category. So we'll go over that again, but I want to get through these other questions here. And that is, could you go over the financial decline parameters again? I know you just went over that, but do you mind just kind of reiterating that?
So there's generally speaking, three different paths to qualify. It is not a combination of the paths. It's one or the other, okay? One of those paths they're referring to here, the financial decline. It's a revenue decline. And very simply put, the quarter that you're qualifying, which could be one of 6 quarters, starting in Q2 2020, Q3, Q4, Q1 of 2021, Q2, Q3 of 2021. Those 6 quarters, you're taking an independent look at each of them. Now, our questionnaire will do this without you probably realizing this, but for the revenue, you're taking one of those quarters, you're looking at your top line revenue, and you're comparing it to the same quarter in 2019. And if that revenue in the quarter that you're qualifying for is 20% lower than what you were doing in 2019, automatic qualification. Top line revenue decline of 20%. They basically want to know that your business before COVID in 2019 was the baseline, and they want to see that there was a 20% reduction in the quarter that you're qualifying for. Because, although there could be multiple reasons for that, the general reason for that is the pandemic affected you and it affected your revenue. Now, that's one way to qualify. We hear a lot of businesses that pivoted, that adjusted, that cut out costs, whatever the case might be, in their profit and even revenue actually increased. This was the COVID effect. There's an argument that was all inflated, right? As things got more expensive, as we just saw with the inflation numbers, sure, you might have made more revenue, but in real return, it might not have made more money. So it's not all about the revenue decline. The second path to qualify is supply chain disruptions, which is where most of you guys will qualify for. And the third path is a direct shutdown, which I don't think anyone here, because you're essential businesses. Dental offices are essential, I believe, right?
Yeah, I mean, they did shut us down in a few months, and that's actually someone had brought this up in our group, and I'm reading it right now, and I think that it's totally false based on what you said. He was saying that according to my accountant, in order to qualify, your state had to mandate your shutdown. Well, you just told us that there's other pathways there. It's not just the shutdown, correct?
So yeah, and so I don't want to talk bad about any accountant or any CPA, because they're smarter than I am and do a better job at 1,000 things. But we do a pretty good job at this one thing, and that's all we do, our name ERC specialists. There's been so much misinformation about ERC and a lot of changes. At one point, to say that you don't qualify for ERC because you got PPP was actually accurate, but that's changed. To say that you only qualify for revenue or a direct shutdown is not accurate. And specifically, 2020 IRS notice 2021-20, page 28 towards the bottom, that question was actually brought up. I'm an essential business. I was never shut down, even though there might have been a government shutdown, but it was irrelevant. It didn't apply to me. Is there a path for me to qualify? And yes, if operations were affected with supply chain, that's one of the ways that it was affected. This is so broad. Let's be clear about what this is. And I like the definitive ways to qualify and the definitive aspects of this. Mm-hmm. But unfortunately, ERC is wide open and has caused a lot of uncertainty on a lot of it. 3 different tax attorneys that we have retained and talked with, 3 out of 3, right? So it's not like 3 out of 6, but the 3 out of 3 have looked at this and said, we could get any company to qualify. This is so broad. So that's the extreme on one side. We don't want to take that extreme. We definitely know, though, with supply chain, with revenue, with direct shutdowns, one of those 3 paths, very definitive, although it could be much more broad than that. So we try to stay on that conservative side. Also, with so many changes in this program, let's not guess, just go through the questionnaire. When it comes to your CPA, a lot of times they mean well, but they have so many other things to worry about. And understanding everything, all the details of ERC is they probably just don't have the time to really understand that. So be very cautious on what you may hear from an accountant. They mean well, but it can cost you tens of thousands and maybe 100,000 or more as a mistake.
Yeah, no, and that's going to lead to the next question. I have a doc who's actually tried to work with another company and it didn't go anywhere. And he just finally told him, just forget it after going back and forth. If you're already in the process and you're working with someone, but never got your funds, could they still pivot and work with you guys?
Yes and no. The reason I say yes and no is we are aware of a lot of these companies and they're getting backlogged. One thing that I think has set us apart is a little bit of foreseeing the need for this. Realizing when PPP started, you had banks like Chase and Bank of America, they couldn't help customers. I don't know if you guys were in that doing it for your business, but I was. And you reached out to Chase and, oh, we don't know the guidelines yet. You reached out to another company, we can't help you. So then you had fintech companies like Lendio or Womply go from just small companies to billion-dollar valuations because they were ready to say, hey, we're ready for you. Here's the qualifying questions. Let us know. We'll get your documents and we'll package it to lenders. And they were ready. So we saw that need for ERC and no one was doing it. And that's really why we said, look, whether it is in the next month or two or in a year or two, there's going to be a mad rush of people understanding what this credit is and that there's not a great way to fulfill it. So other fulfillment companies we are seeing getting bottlenecked, even with 10 files or 20 files or 100 files, we're getting about 300 to 400 companies coming in every day. So our process engineering or IP is the ability to scale and everything is very systematic. So roundabout question, can they pivot to us? Yes, we would love to have that happen. We can't do anything if they've already filed and maybe they're not communicating if that's happened or not. We also, I want to just be clear, some companies will have you sign a contract before they do anything. We don't do that. You don't sign anything with us until you're like, okay, file it today and we're ready and we've done a few weeks of work. So they may have locked you into that service or the right to charge you. I think it would be very unethical for them to proceed with that if they actually never file, but you would have nothing to lose. Let's put it this way. You would have nothing to lose to go through us and have us file. The worst that can happen is that one company, let's say this first company actually filed and credit came through them. We filed behind. We don't know about this first one. The IRS is just going to get back to us and say, we already have an amended 941 that was the exact same, and they'll send us a notice to fix it. Once we understand what that notice is, it's already happened, then we just don't pursue it anymore. Yeah. And we don't charge the customer.
Hey, but the upside is if they never did anything,
then they get
you guys get the paperwork through, you're going to get paid through ERC specialists with the help of ERC specialists, and you wouldn't have wasted time because again, like you don't even know what's going on with that other company. And so it's just a no-brainer to at least try because chances are if it's just sitting on their desk, who knows when you're going to get the money, right?
Yeah, and I can't speak to what other companies are doing, but I am hearing weird things that even like ADP was a year behind on hearing back from the IRS. We're hearing in the hundreds a day checks coming back from ones that we had filed before, 5 or 6 months ago. So it's working flawlessly with us. I don't think we have any secret sauce. We're just good at what we do, I think. So no, we're getting checks back. It's coming full circle. We're seeing it start to finish and have been seeing that for several months now.
Excellent. All right, we got this other question here. So this doc wants to know, could you expand on the supply chain disruption qualification?
Okay, yes. So we can talk for multiple hours on this. So I'll try to condense it, and I'll give you a little bit more insight on.
Because we all had issues like getting gloves, getting all those type of things. So we really did go through that. We had an issue with just getting protective gear and whatnot. So we all know that that was very big in almost all of our practice, having those shortages.
Okay. So first off, we have a lot, and I don't know who's joined us since I brought this up, but we have a lot of dentists that have come in, filed with us, received money. There's not an inherent red flag with dental offices, doctor's offices, things like that. I think, although I can't speak to your specific business, I think generally speaking, there's lots of ways to qualify being in the business that you're in. Speaking specific to supply chain, I'll give you a little bit more detail. Here's how you qualify for supply chain. What if you were a business and I'm a construction business, but I also sell widgets on the side. Well, the widgets on the side only accounted for 2% of my revenue, but those widgets were disrupted in supply chain and it affected my business. And the construction company, let's say, was fine. Those widgets that represented 2% of my revenue, does that qualify me for a supply chain disruption? And the answer to that would be no. We first have to establish that what was affected with the supply chain was a significant part of your business. And the IRS, I say significant, but the IRS says at least 10% of your business. So for most everyone on here, what you're doing is 100% of your business. You're not into a lot of things. You're a dentist and that's your business. You see patients, you patch up their teeth and fix cavities and everything else, right? And then that's your business. You got to look at that as a whole. Then so once you establish that yes, what was affected was at least 10% of my business in 2019, then you look at the quarter that you're qualifying and say, was that item or items disrupted? Gloves or equipment, or Glenn, I don't know, maybe you can speak to some of the things that might have been delayed that were common. Anything that affected operations. And that could be change in hours, that could be change in manpower or the need for manpower, or postponing customers because of that, or pushing them out, or delaying that.
All the above, Mark. All the above, what you just said there.
And I'm not giving you an exhaustive list. I'm just trying to rattle off probably 200 things that it could be. And it's very vague. Disruption to operation is vague. And that's why the tax attorneys are saying, how does the IRS how are they even going to manage to this? So in any case, so what was affected? Actually, let me back up and try to state this a little bit more clearly. Operations needed to be affected in that quarter by a supply chain disruption, just generally speaking. And then, then what was disrupted? Was it a big enough part of your business? That's where you go into 19 and say, in 19, was that part of my business? And in most cases, the answer is yes. That's why, coming back to the startup credit, because you can't look back to 2019, there's none of those qualifications. If you're a new business startup starting after February 15th, 2020, supply chain revenue thrown out the window. You're a new business and you didn't make $1 million in 2021, you qualify. Now it's just a matter of how much is the credit, which can be up to 70% of the wages, and it caps with the new business startup credit. But okay, that was actually a rambling. Now that I heard myself talk, that was kind of a rambling explanation. In the comments, let me know if that confused you more, or if that was helpful.
Okay, yeah, you can ask a follow-up question. We do have another follow-up question here, and I think this doc wants to get even more specific. So let's just dive right in. Again, I'm going to tell you, Doc, there was a link in there. The easiest way, right? Mark's going to answer your question, but look, just click the link, go see if you qualify. They'll let you know, and then once you know, you're in the pipeline. You can start the process, right? But with that being said, we're going to get your question answered. Okay, so my entity was formed on February 28, 2020.
Yeah, so I see this in the chat.
Yeah, started the business in September 2020. And then the Q4 revenue was 200K in 2020. 2021 yearly revenue was 1 million, although the first quarter was less than 250K. Do I qualify?
So
a lot of stuff to unravel there.
Yeah. So the good news with the startup credit, it's pretty simple. This is black and white. Absolutely, you qualify.
Okay.
Okay. So let's break that down though, because I talked about 1 million, and he said it might have been 1 million or a little over or something. The true definition of that was the average revenue can't be over 1 million. And they're alluding to from the year you started and 2021. So in this case, he started in 2020, so we can use those numbers, 200,000, 2021, 1 million. The average there is 600,000 for the year. So we qualify, great. Now the question is, what was your W-2 payroll in Q3 and Q4? Times that by about 70%, and that's generally about what your credit's going to be, with a max of 50,000 in each of those quarters.
Hey, here's the thing. At the end of the day, if you weren't applying for this, you know, whatever money you're going to get, you weren't going to get it if you didn't apply, right? But now you know. And again, speaking of which, let me go ahead and make sure everyone has this link here. I want to go ahead and post a link in there. Anyone else have questions? Type it in the comment section.
So I'm going to preempt, I'm going to assume this question is out there, and that is, why are you telling me about it? And this is the first time I'm hearing about it. Yeah. So if you're like me, I had this question quite a bit, and it's actually one of the biggest ones we need to overcome. And again, because we have a smart audience, I want to give you some background to why that is. The first reason for that is you could not do both. And so out of the gate, when there was so much information about the CARES Act, it was not even an option. So it didn't get any press. The second reason is there was no existing network that was going to be compensated to get the word out. With PPP, you had an existing lender network. They were making 1 to 5% on every PPP loan. $600 billion went out for PPP. Banks cleaned up. Okay, of course they're going to email their database and get the word out. With the EIDL loan program, that was governed by the SBA, and it was an existing program, so it was already kind of known, and it was pushed at the onset. With this, the acronym is Employee Retention Tax Credit. If you go back to your emails on some of this, you'll actually see ERC probably in some of those emails. It's always been there. But because it said tax, if you were like most people, you subconsciously didn't even register it because you thought your accountant would be your advocate. But again, as we talked about, accountants don't deal with quarterly payroll taxes. So this is a credit, a very large credit that all was but forgotten. Until companies like ours, not to toot our own horn, but we realized we need an advocate network to go out and tell people about this because it is often overlooked. It was so overlooked that I mentioned in the infrastructure bill, they amended this ERC program. That could have gone two different ways. It was debated, number one, to extend the program and fund it even more for education to let businesses know about it. Or number two, they could cut off Q4 and call it quits and move on. And that's what they did. So they cut off Q4 and said, this was a disaster of a program, let's move on. Okay, so again, we talked about how you can amend taxes though, so this is still wide open. It's not like it's over. But to clarify Q4, if people are wondering about that, with the startup business credit, you can do Q3 and Q4. With everything but the startup credit, Q4 is no longer, so it ends in Q3. Don't worry about those details though. That's what we do when we ask you questions with the questionnaire, and you can upload everything without talking to anyone from our side, corporate. It's that intuitive. Having said that, if you have questions, we have 80 employees outside my door that are here to assist you and help and walk you through all that.
Mark, so we have another question here, and that is, do we need to amend the 941 to apply for that startup credit?
Yes. So that's what we do, is we'll amend that. That's what we're submitting as the tax preparer on that. So this is with the assumption that you have already filed an original 941. Now, at some point, although we're past the time frame on that, at some point you could have included the credit on the original 941. So that could have been a possibility when we were in that time frame, but now everything is amending. So yeah, that's exactly what's happening.
Okay. And then, and guys, keep the questions coming. But you know, Mark's got a family too. Okay, so let's go. Let's keep it going here.
I actually could talk about this for a while. I know it's boring and it's taxes, but we're helping so many businesses. It's a lot of money. It's fun. So yeah, I could talk about this for a while.
So this doctor's asking, so employee headcount, does it need to be full-time employees?
Yeah, great question. So it is full-time employees. If you guys really dove into PPP, you may know some of the intricacies of this. The headcount is 500 full-time, meaning with the Paycheck Protection Program, and I use that to compare, you know, in a certain ways that this is a payroll tax credit, this COVID Act relief fund, you know, things like that. But yes, with PPP, if you had one 20-hour employee and a second 20-hour employee, two part-time employees, that counted as a full-time employee for PPP. With ERC, that is not the case. If you have one full-time, one part-time and a second part-time, your count is still 0 full-time employees. Now, to be very clear, we can use those wages of those part-time. We're going to use every wage we can to maximize your credit. It's not just full-time employees. This is just for the ones that, you know, that hit that ceiling. These are for medium to large size businesses.
Okay. And then we have another question here. When they ask when you started your business, is that the day your LLC was created or first day of payroll? I guess in this case it would be like payroll, right?
So we actually luckily have some leeway here.
Okay.
So this is what I mentioned earlier on the call. It could be the date of the EIN creation. A lot of times that's created 4 or 5 months before the business starts. And that might be helpful if you want to get before the February 15th. You might have to kind of look at your payroll. If all your payroll is just Q3 and Q4, then, you know, and you're not going to have more than 70,000 in those quarters. You may just want to push it out to the startup part. But if you want to take advantage, if you had payroll in Q1 and Q2 and Q3 of 2021 and 2020, then you're going to want to try to get in before then. So how we do that, you have some options. Date of the creation of the EIN. So that would be the start of your business. Or if you want to have an argument that it's when you actually started operations, just as strong of an argument. So you can go either way on that.
And just a follow-up question. Hold on here. I had multiple questions. Let me do the follow-up question. So I started, the EIN is in January 2020. My office opened, payroll started Q3. So which one is better? I guess the question would be, is it better to do the startup or is it better to do the other thing that you were talking about?
Typically, it's better to do before February 15th because there's more quarters that you can use payroll for. So in this case, if we went before, you'd be able to use, I'm assuming you said Q3 of 2020. So in this case, we could use Q3, Q4 of 2020, Q1, Q2, Q3 of 2021 as a potential 5 quarters. The startup only has 2 quarters. Okay. So which is better? Without like looking at the details of your payroll, I'm assuming it kind of grew over time, but there was a decent amount in Q1 and Q2, then you would want to be before the February 15th, 2020 date.
Okay. And then here's a question here. To expand on wages being used, you stated that you can use all wages. Would that include like maybe temporary employees, maybe people who are coming in for like a working interview, or is it just like full-time employees who are, you know, on a permanent status?
It's all W-2 waged employees.
W-2 waged employees.
Whether they were part-time, full-time, temp, whether they worked out for 1 week or for the whole year, with PPP, you had to have had the same number of employees after the pandemic and stay in business too. So that's another good point. You don't even need to still be in business today. This is a refund on what already happened. So there's nothing that needs to happen, you know, moving forward. So yes, you can use all W-2 wages that were paid out, regardless of who that employee is, with the exception is if that employee was a majority owner.
Okay. All right, guys, any other questions? I'm going to put the link again. Here is the link. Click on the link, see if you qualify. It's very easy. There's a big button that says, do I qualify? Just click on that button, put all the information in there, and they'll let you know. There's no guessing involved. And again, here's the thing. We already talked about the deadlines and whatnot. Technically, there's not a deadline, but you don't want to wait too long and have all these people ahead of you, and then there's a backlog, right? That's number one. And number two, anything can change, right? You don't want to miss out on this. And again, if you didn't even know about this, if you weren't even applying for it, it's a no-brainer. It's a no-brainer. And have the guys that are the experts in this, Mark and his team. Mark, before just an hour just flew by and I learned so much. And there's so many misconceptions in our group. I can't wait to just type in the comments later and let everyone know what you said. But before we log off, Mark, anything that you want to tell all the doctors that are on this call right now? Any words of advice or anything that you wanted to add? No,
we could talk forever. One thing that didn't really come up that sometimes is on everyone's mind is, I haven't heard about this. Is this legal? Is this, why isn't everyone doing this? That doesn't need to be a reason why you don't proceed with this, or at least see if you qualify. To be very clear, most businesses are starting to hear about this and do it to the tune of hundreds of thousands of businesses. Forbes came out with an article about 3 months ago saying that 70 to 80% of businesses qualify for ERC. So that is subjective, but there's a little bit of clout with Forbes. With my experience, feel the same way, knowing the qualification paths, knowing how widespread that would be. A business that may have a hard time qualifying to compare to a business like a dental practice is a service-based business that is all online. Let's say a marketing company. Okay, so when COVID hit, they could still stay online. They had no physical goods or products that were being delivered or delayed with shipping. Let's say their revenue did not decline. This would be a hard case to actually try to find a qualification. A dental practice that definitely had to adjust operations with COVID in the medical space might have had items that were delayed with shipping that affected operations, may have had revenue declines, all of those things. I would say out of any one particular group, I see dental office coming through our system all the time. So, and again, we're working with state dental associations, I think in a few different states. So you're in great company. A lot of your fellow business owners, dental practitioners are doing this credit. We do a great job. Although we don't have a special relationship with the IRS, I can't claim that. We have talked with the IRS, this ERC department. They're aware of what we're doing. We're probably delivering over 1,000 pieces of mail every day. We're getting that back from them every day. So this is not a program for the minority of businesses out there. This is meant for you guys. It's a big credit. And the only thing standing in your way is actually taking action. Glenn's not gonna reach out and do it for you. He can only do so much, right? So there's a little bit of effort, but it's not that much effort for you guys to get potentially a few $100,000. The average credit is $205,000 as of today that we work with.
I think everyone in this room can use that, right?
Everyone can, regardless of, yeah. So anyways, I appreciate you guys' time. Let's see, was that all the questions? I think that was it, right?
Yep.
Okay, well, thank you guys. I appreciate it.
And Mark, thank you so much for jumping on. We appreciate it. It's not every day that the CEO of the company jumps on a webinar. So again, guys, here's a link. If you have any questions later, I'm in contact with Mark too. I can always ping him and ask him different questions. But here's the thing. Click on the link, just get started, and you'll find out soon enough if you qualify. And they're the experts in this. They'll figure out. And maybe at that point, when you're going through this process, if you have questions, you can reach out to them directly as well. So yeah. Mark, thank you so much for jumping on. Guys, thanks for tuning in. And, we'll talk to you guys next time. Thanks, Mark.
Thank you.